Retail wasn't or isn't the only warning sign for stocks. The man who called last year's sell-off says we are already in a bear market and it will only get worse from here. Let's bring in Mark Yusko, the CEO and Chief Investment Officer of Morgan Creek Capital Management. Mark, welcome back. Great to see you.
Hey, Melissa, great to see you.
How much more do we have to go then in this bear market that you say we're in?
Yeah, look, we talked about it last October that, we thought that the end of 2018 we'd finish down low single digits. That kind of happened. We thought that this year we'd get a couple of bear market bounces. We'd bounce around, and then by the end of the year, I think we'll see low double-digit losses. And I think the big down year is the credit crisis that's coming in 2020. So I think 12 to 14% by the end of the year wouldn't surprise me at all.
You say you love EMs. Can you tell us which ones? You loved them back then. Has your view changed at all, and has your view of certain EMs changed?
Yeah, it's great. So, back in October, we talked about the carbs, China, Argentina, Russia, Brazil, South Korea. I don't really like South Korea, but I needed an S, so I added that in there because they're really a developed market.
Carbs. Nice.
But if you look at that since September, those 5 countries are actually ahead of the S&P. The S&P is a little bit down. Brazil's up nicely. China's up nicely. Argentina's kind of flat. Going forward from here, to answer your question, we still like China a lot. We think it's very cheap. Anytime you buy China below 10 times earnings, that's a good thing. I kind of like Argentina because people hate it. And I usually am drawn to things that people hate. Brazil's had a good run. I'm a little more skeptical about Brazil short term. And then Russia, I actually agree with the commentary from a few minutes ago that with oil prices probably heading a little lower, I'd probably step back a little bit from Russia. And what's interesting about South Korea is in free fall. It's one of the 4 horsemen of the growth apocalypse. So you got copper prices, Dr. Copper, you got 10-year yields, you got oil prices, and the Kospi. When those 4 things are declining like they are now, you're usually going to have GDP surprise to the negative, earnings surprise to the negative, and stock surprise to the negative.
Hey, Mark, it's Tim. So I agree with the concern on the credit dynamics, and we talk about the debt to GDP levels, et cetera, the triple B threat that's out there. How does EM outperform in that environment? I'm someone that obviously comes at this from a generally bullish position on EM. I look at the blowout in EM currencies. I look what the dollar's doing. It's about to break out to fresh, 15, 18-month highs.
Yeah.
How do EM currencies reconcile that?
No, look, that's a really important point. And if you look over the past 12 months, EM currencies have been a really big drag on EM returns. I think the dollar rally is kind of peaking out here. I think we're going to kind of roll over second half as we see a lot of weakness, particularly around oil. So I agree with you that has been a headwind. And I'll use 70s music. So in the U.S., I'll use Bachman Turner Overdrive. You ain't seen nothing yet. And in EM, we're going to use Go Your Own Way. I think EM is so cheap relative to the rest of the world. Now, look, if we have a really bad downturn, EM's going to go down too. So I like, to intermittent fast here. So we carb loaded in the first quarter. Let's do an intermittent fast over the summer, and then we'll carb load again in the fall.
All right. Growth apocalypse sounds pretty terrible, Mark. So I'm curious, when you take a look at the Fed, and the Fed minutes were released today, and it seemed like they opened the door to a possible rate cut if inflation remained to the downside and was anchored below 2%. How do you view the Fed in this growth apocalypse? Is it a floor under how bad it could be, or is it an accelerant of this growth apocalypse scenario?
Yeah, I mean, really important point. And growth apocalypse is hyperbolic for effect, so I agree with you. And when I say growth apocalypse, I mean, one handle for the second quarter, maybe lower for the third quarter, and recession sometime late this year, early next year. Again, shallow recession, like 2001. People forget, for the whole year of 2001, growth was positive. We just had 2 negative quarters. They weren't even back to back, but it was still a recession, and the market still fell a lot over the next 18 months. So the Fed, to me, is reiterating the problem. When they say that they're closer to a rate cut than a hike, that says to me that we're closer to economic weakness than strength. High interest rates are a sign of economic strength. Low interest rates are a sign of economic weakness. That's been true for centuries, and it's true today. So anytime that the Fed has paused and gone into rate cut mode after a rate hike cycle, look back. They did it in 2001. They did a bunch of cuts. We had a 58% peak to trough drop in the markets. We had a recession. They did it again in 2008. They did a bunch of rate cuts. We had a 65% peak to trough drop in markets and a recession, global financial crisis. We don't want the Fed to pause and start cutting because that means they see weakness, not growth.
Hey, Mark, it's BK. So this all sounds pretty terrible for most investors. What do I put my money in? And please say Bitcoin.
Oh, come on. I didn't let you ask that question and toss up a softball for him to knock out of the park. But anyway,
no, look,
go ahead, Mark.
my,
What do you think here, Bitcoin? Do you think that it has legs, more legs to the upside?
I'm even wearing my Bitcoin tie today. I got my Bitcoin tie on for you guys. Look, you know, I was lucky. I happened to be on Melissa's more afternoon show back in December. The week it was at 3,100. And she said, what do you think? And I said, look, we've issued the Morgan Creek Digital Crypto Challenge. We will take Bitcoin over the next 10 years, starting on January 1st, and we'll take anybody who wants to take the other side, $1 million charity bet, just like the Buffett-style bet. We got no takers. Now, it's a good thing they didn't take it because Bitcoin's up over 100% this year. The S&P is up 14. But I think going forward from here, even over the next year, over the next 10 years, it's not going to be close. Bitcoin is a great diversifying asset, has very low correlation. It should be in everybody's portfolio.
All right. I'm sure we'll speak to you before the end of that term. Thanks, Mark.
All right. Thanks.
Mark Yusko, Morgan
Thanks, guys.
Creek
Really appreciate it.
Capital.
Some people might say he lost a bet wearing that tie. Oh, I'm just kidding, Mark. No.
Hey, BK gave him that tie. Don't say that.
That was a gift. It's 100% real.
A couple things going on there. I agree with him that I think cutting rates is a sign of weakness. I think the Fed is really running out of bullets. The problem, though, with cutting rates at this point, or the problem with the whole macro environment, is there is no inflation. And every economist can't tell you why there's no inflation. So this, I don't know if it's a product of the global environment that we live in. We're just not going to, he's overlaying a metrics that doesn't exist any longer. But I'll touch on the Bitcoin thing. I think the gold, Bitcoin inverse correlation, if you think Bitcoin's going higher, then you sell gold.
Aaron?
I mean, I'm sort of a believer in Bitcoin. Who knows in the short term, but I'm long. I'm
sort
long
of
BK,
a believer.
basically.
It doesn't sound like a heavy endorsement.
I have no idea where it's going to go.
Right.
I wouldn't take the other side of that $1 million bet, right? And in terms of the other thing, the thing that he said about the Fed cutting, that would be a bad thing. The Fed would be in response. It's sort of saying, like, if you have to have this treatment, if you don't do the treatment, you're not sick. Right? I think the underlying data is what it is.
Right. It's either weak and the Fed responds or it's not.
Or it's not. Right. So that part I don't agree with, but, he's a smart guy.